Hello everyone, welcome back, and yeah, happy to have you all in the call again. This is the 5th episode of our webinar series. We are really happy to have enough, again, lots of participants here in the call. To many of them, I have to apologize actually because we sent them out some wrong invitations for the calendar. So some of them had already a starting date or starting time at 12:30 in the calendar. So I really apologize for that. And I hope that you stayed patient with us. It's definitely worth it. We have Lawson Steele with us today, one of the big and renowned experts when it comes to carbon pricing. And we had already the pleasure in the last weeks to look into the gas markets, power markets. So it's really time to look into one of the most interesting and volatile markets. Lawson was one of them who made it actually really interesting by prognosing very early that carbon prices will go down in 2006 to zero, and he was right. So he built a reputation by that, became bullish meanwhile, and I think he has lots to share with us today. As always, we want to keep it short. First, the intro, second, the presentation to something like 20-25 minutes, so you have enough time to contribute with your questions. Please feel free to enter them in the bottom of your Zoom application in the Q&A part. We'll pick them up. Most of them was probably at the end of the presentation. Try to cluster it a little bit and have a lively discussion afterwards. And really feel free to contribute. And now I'm handing over to Lawson. Thanks. Great to have you on board.
Well, thanks, Jens, and thanks, Enmacc, for inviting me to chat here. Seems lockdown is not so much fun when it gets chilly, but anyway, we're back to sort of mini winter, I think, before we head back into the summer. Right, so what I wanted to do, I'll just share my screen. I was invited to sort of talk really about the carbon market, and it seemed to be a good title to talk about delayed or derailed, and we'll try and explore all those issues in the short time period that we have. We'll skip through the disclaimers. So the agenda is broadly, I think it's about 7 points or so, where I propose to have a look at the ETS carbon price, what's been driving it of late, what the demand supply outlook looks like in the short term and in the long term. What are the financial investors thinking at the moment? I talked to probably most of those, I'd say. What the market reforms are going to look like potentially, what could be a political reaction to high or low carbon prices, what could surprise us, and finally end with how I see the carbon price developing, which is probably the one thing you want to see, but that's the last one. Sorry about the dogs. So the first thing which I thought was quite interesting is that I've been puzzled as to why the carbon price is going up, frankly, because I think there's a lot of sort of fundamental reasons why it should be going down at the moment. And I pulled this chart off Bloomberg, which shows pretty clearly, I think, that what's been driving the carbon price is not whether it's dry, wet, hot, cold, what is EDF doing. It is actually what's happened to the broader equity market, SXXP in this case. And you can see the correlation is pretty stark, which is quite, one thing which is funny, if my mouse works on here, I think it does, is that at this point in sort of mid-March, early March, I was thinking, oh, carbon's doing quite well because it's outperforming the SSXP and the broader market, so it's showing, you know, it's made of sterner stuff, and then kaboom, it catches down to the SSXP. And since then, you know, it's broadly been pretty much in line with that broader market recovery. So I think that's interesting because the SSXP at the moment, or the stock market rally is a pretty fragile rally. First of all, it's got pretty poor fundamentals. Valuation levels for shares and equities are now at 30 to 40 year highs, which is extraordinary when you put that against the backdrop of a pretty depressionary macro data with high uncertainty. The rally is really dependent on political actions or policy actions, both fiscal and monetary. And we're probably now heading into the quieter summer months, when holidays tend to dampen activity and policy announcements are likely to weaken. So that's I think an important thing to bear in mind. If you're betting on carbon today, you seem to be betting on an equity rather than the carbon story. And for me, carbon at the moment is defying fundamentals, which are as follows. This is my view on the cumulative carbon surplus or deficit over the coming years. And the big thing is that this year we now have a sort of 200 million or 196 million surplus. And that is in stark contrast to what we used to have, which was a 26 million surplus pre-COVID-19. So that worries me. I mean, longer term, clearly I see, obviously, as you can see, a deficit coming over the next 3 years, which is very significant. But you have a big hump to overcome in the next, well, for this year. And there's some people kind of say, well, we've had COVID-19, we've had the depression, and we've sustained that, so now it's all back and hunky-dory. It's not really, because the reality is that the supply continues unhindered. In fact, I'll talk about that more in a second. It gets worse. And although demand, yes, has come off to its base level, down sort of 22% or so in Q2, it's still going to be down 10% year on year in Q3 and down 6% year on year in Q4. So you've got your supply, which is continuing unabated, probably increasing a bit. Demand's down there, and it's better, but it's still a deficit, right? Or still a surplus, put it that way. So for me, there's still a lot to absorb before we get back on track. And so there's some lenient assumptions in here too. I've assumed within this that you do have some extra buying from industrials ahead of them realizing that they cannot use their phase 4 free allocations to settle their phase 3 in April next year, and also that they realize that they're going to get less free allowances for next year, so they're going to start buying more now. The reality is that could well not be the case, particularly given the sort of stringent financial or precarious financial conditions some of these companies face themselves in. So that worries me, that 200 million. Longer term, as I said, it looks good. But the issue is if you look at the supply of auctions, a lot of people are saying, oh, well, it's great. I even heard somebody say the other day, well, we're past the worst of auction supply. Well, that's not the case at all. Since COVID-19 kicked off, May has been really the lowest month of all. And yet we're going to see a 40% rise in the next couple of months. So going from 58 million up to 80 million permit auctions. Yes, you die down in August, but that's demand dies down then too. So that's matched. But this is a big hump, and we continue with the backdrop that demand is not as low as it was perhaps down here, but nevertheless doesn't quite get up to where supply levels are this year. Hence the 200 million. So that's kind of that kind of worries me. So I'll stop sharing there. So then the other things we're talking about was financial investors and how they're thinking about the carbon market. I must have done, I don't know, 700, 800 meetings since January 2018 when I went on the road with talking about carbon being a bull market. So I speak to all I'd say pretty much all the financial investors out there. And there's been a massive retrenchment in their positions. And that kicked off really in August last year at the peak of 29 euros when we had Arrowgrass hedge fund say, well, not announced, but the rumors were beginning to fly around that they're going to go bust, which indeed they did. And that precipitated a lot of financial investors to ditch their carbon positions ahead of a forced seller in the market. And then in turn, you had all these bear stories come out of the market to almost kind of support as to why the carbon price is going down. But these guys are probably, I would say, if you assume we don't quite know exactly how much they had, but let's say they had 200 million permits at their peak. Numbers I've heard have ranged from 165 to 300. 300 I don't sort of buy into, but say 200. So the 200 means that somebody just said that they can't see the slides anymore. That's deliberate. I don't have any more slides. So the 200 million, and these guys are deleveraged sort of 80 to 90%. So let's say there's sort of 170 million deleveraged, and of course at some points they will come back into the market. But the big difference now is that, I'll just share these slides again actually just to make one point. If you go back to this slide, whereas before this was a 26 million surplus, sorry, pre-COVID, then, with their firepower of 170 million, they could come in and easily turn that into the deficit and bring forward these 3 years effectively. But now 170 million doesn't cover that, first of all. And secondly, some of their financial power has probably been, whittled away. So they don't have 170, say it's, I don't know, 130, 140, whatever it is, but it's not enough to turn that into a deficit. So, the financial players really today are deleveraged, they're on the sidelines, they see the longer term picture, but are worried about the shorter term picture. And indeed, some financial investors I speak to are actually short carbon at the moment. So I think for the moment, you need to park any hope that the financial investors are going to come back into the market anytime soon. Then, in terms of potential reform, I think, first of all, you've got the tightening of the 2030 goals and 2050. And some market participants have been sort of getting terribly excited about this. For me, it's a bit of a red herring. If you tighten our goals from a 40% reduction on 1990 level emissions in 2030 to 50% or 55%, then that means that via the linear reduction factor, the mechanism, you will take more permits out of the auctions in the coming years. For me, that is probably an event of the magnitude of 25 to 37, call it 40 million permits. That's the range per annum. It's not going to start till 2022 at the very earliest. And frankly, in the context of the other numbers out there, of the deficit numbers, it's just noise. It doesn't really make any difference to what the carbon price should be doing today. Then we have the tightening of industrial free allocations next year. Originally, we were going to hear that in June from the EU as to what it would be. Now it's probably more like a September or Q3, maybe early Q4 time we hear that. I've assumed that we have a 10% tightening, but we'll see what that happens there. Obviously, as I mentioned, they cannot settle their phase 4 by 2021 or 2020 rather. I can't settle the 2020 requirement in April with their phase 4 free allocation, which they get in February 2021. Then in terms of the mechanism by which we tighten the market, the MSR, there will be a review. Undoubtedly, there's some pressure to say that at the moment we're getting a 24% of the total number of allowances in circulation reduction each year, 24%. Then that drops to 12% in 2024. There's talk about that being maintained at 24%, or some people pushing for it. Whatever happens on that, it would need to be accompanied by a tightening of the threshold of the 833 million. If anybody wants me to go into that, I can. But for me, that's not agreed. And it's not going to happen before 2021, probably a 2022, and it won't be come into being or have an impact onto 2024 in any case. So again, it's nice sentiment, but in practice, it's not hard numbers for 3 or 4 years. Then let's talk about a carbon border tax. You know, the people at the EU I've talked with about the carbon border tax is that it's very difficult to implement, but there seems to be quite a strong will to get something in there. It seems like it's going to be where the cement industry is going to be taken in first. That, of course, would mean that they cancel the free allocations to the cement industry, because there's no need to protect them anymore, since everybody will be on the same level playing field with a carbon border tax. So that in some ways is kind of a neutral event, because you're saying, you know, we'll cancel the free allowances and you're going to have to go buy them on the market. Well, that's kind of a neutral thing, although maybe they can tighten something on the way doing that, but that's a bit sort of esoteric, I think. You know, Brexit, you know, that's on its way. As far as I'm concerned, that's in our numbers. We assume that UK leaves and it creates its own system. There's talk about having some kind of tie-up with the EU, but we'll see. And then moving on to the next topic, two more to go. The political reaction to carbon prices. I think, you know, the reality is that you can have very low prices, in which case there'll be a move to have a carbon floor. I still don't see, although we've heard France talk about it, we've heard Germany talk about it, but I don't see 27 countries in the EU agreeing to that. I still think there's, you know, that will take, I think by the time, if carbon goes down, as I think it will, giving slightly away what I think, then I think by the time they get towards a floor, it'll take, carbon will have recovered, and it'll be just a pointless argument. I think undoubtedly there will be a political reaction to high power prices. I've always said that, and I do think carbon can go extremely high once we get over this huge hump. But I've got a few comments on that if you want to explore that later, but undoubtedly there'll be a political reaction, but it will be a reaction, right? The price has to go up to a certain level, which makes you worried, which creates that debate. It has to stay there for 3 or 6 months to realize it's not an aberration. And then you will have the debate, and then it will get agreed, and then it'll get passed. You know, there's a long reaction to high carbon prices. Then what else I got down here? Then, yeah, just to sort of finish before I talk about my carbon price prediction, in terms of potential surprises, I think the first thing to make absolutely clear is that the EU, every single conversation I've had with them since 2004, before the scheme even started, down to, you know, last December when I went to see them, and interaction subsequently, is that one thing they're absolutely keen to avoid is surprises. And that is partly why the MSR legislation took 4 years to put through, because it had to be debated and they get everybody to have their opinion and everything else. So that's the first thing. They're very keen to avoid surprises. I think the other surprise clearly is if we have a resurgence of you know, COVID-19 back to a lockdown or some lockdown semblance. Not predictable. So finally, in terms of my carbon price forecasts, you know, again, I think if we go back to here, you've got to get over this hump. So I think at this point for this year, we could see carbon quite easily below 15 again, before it then begins to pull up. You know, longer term out here, I can see carbon being in a 65 as my actual forecast. I think it could go into triple digits, just because of the mechanism of setting prices, which we can discuss if anybody wants to. But before that, there's a big hump to absorb, and somebody's got to buy that 200 million. So with that, I'll maybe throw it open back to you, Jens, and questions.
I think just to the chart you just have shown, there was one, I think, question connected to that. You show the yearly supply and demand balance, how it develops with the hump. The question is, why do you don't bring the overall market balance into account? They say that at the lowest point, the market has twice as much supply as necessary. Can you connect to that?
So this is the cumulative balance going all the way down, but it's showing the yearly demand supply balance. So you start from 115. You have this last year. You had a big deficit, which took it down to 231, and so on. So this is definitely a cumulative with the annual impact and cumulative. So in other words, by 2023, we're down at a deficit of 678 million, which is probably about 75%.
Yeah. Okay. Then there are questions around the UK regime, specifically what can we expect there and how is it working next to the European regime, if there's a new one, and maybe tied to that as well. In Germany, we get as well a German regime which works next to the European one. How's that affecting the markets, and can that work at all? No?
Yeah, it's important to distinguish, and I hear this a lot. People see carbon and they think, oh, it's all one thing. And the issue is that in Germany, so first of all, the ETS system, the European emission trading system, is about 48% of emissions in Europe. So it has oil and gas, it has utilities, it has pulp and paper, it has chemicals, it has cement, and I'm probably missing one other. What it doesn't have is agriculture, transport, and residential. The carbon tax in Germany is specifically for industries which are outside of the ETS scheme. So the German government said, look, everybody has to do something here. So therefore, we're putting this carbon tax in place, which starts at 25 euros per ton next year and climbs up to 55 to 65 band by 2023 or 24. That has got nothing to do with the ETS system. I think it's interesting because I think what it's telling us is that the political will to get carbon up to a high price, or what seems like a high price today, is there. All right. So in other words, or to put it another way, 65 euros in 2023-24 is politically acceptable. Right. This is the industrial heartland of Europe, which has most to lose, saying we must do this, and this is the price we're prepared to go for. But it's completely different, separate to the ETS scheme. The UK is, as we stand at the moment, is moving out of the ETS scheme. We are going to put in a £15, is the latest thinking, £15 carbon floor. We will have our own scheme. We may or may not link it in some shape or form to the European ETS scheme at some point. So, that's as woolly as it gets. And I've spoken to the UK guy, and it's very woolly at the moment.
Okay, so no clarity. You demonstrated really clearly that the price development was very much tied to the financial market development. And then you talked about the imbalance of supply and demand. So what is the point when this kind of parallel movement with the financial markets will not continue? So what needs to happen that this close alignment stops and basically the supply and demand take over, driving the prices? And maybe one question connected to that, there was the 15 euros per ton mark we discussed. Can it go below 15 euros? Do you see that coming? And is it only happening if we have a second wave of COVID-19, or is it simply driven as well by the longer term development of industry right now?
Quite when it happens is difficult to know. What we're seeing at the moment is price behavior, not just in carbon, but in equities too, which is not linked at all to fundamentals. Okay, so it's basically what's happened is that, you know, the central banks have pumped money into the system, and that has found its way into every type of equity, commodity, call it what you like, and that's propped up the prices. That doesn't continue unabated, right? That comes to an end. And I, you know, I'm a fundamentals guy, right? So, you know, and it stood me in good stead for the last 33, 34 years I've been in this kind of business. You know, in the short term, all sorts of things can happen, but the fundamentals rule in the end. So I do expect there to be some, you know, in the next couple of months. I mean, you've got you saw the auction volumes, right? Just to refresh them again, but you know, these, you know, that's a massive increase there. We've got a huge volume coming through in the next couple of months, kind of starting nowish, really. And if someone doesn't turn up to buy those, then the price has to come down to tempt them to buy them, right? Which goes on to the point of 15 euros. Can it go lower? Absolutely. You know, I cannot give you a mathematical equation which delivers 15 euros, right? Just like I can't give you a mathematical equation which delivers 65 euros, which is why, in theory, carbon can go to infinity. It won't, because you'll have a political reaction, you'll have elasticity of demand. But the way the system's set up at the moment, because it's cap and trade, it's if you've got a fixed supply and there's no demand, just like in 2006, it went to zero, right? And likewise, if the demand is above supply and you've got a penalty of non-compliance each year of 108 euros, plus still having to deliver that permit the following year, it kind of goes to infinity in theory. So you've got this, which is why carbon probably is so volatile. So for me, yes, it can definitely go below 15. So yeah.
There was one question. How did you, or what is your view on the effect on the airlines industry? Because they are basically big driver of the demand side. How do you see their recovery?
Well, what I did right at the start, I was quite proactive, and I just halved airline demand for this year. Now, the airlines is kind of slightly weird because they actually sit outside the ETS scheme, but they have their own EUAA compliance requirement, and they are allowed to buy permits from the ETS scheme to settle their requirements, but they cannot sell into the scheme, right? So they can do only one-way trade. You know, at the moment they're lobbying to have a sort of 2019 baseline year as sort of setting their benchmark for emissions, instead of an average of 2019 and 2020 is what it should be, according to the current rules. In other words, so if they set it to 2019, that means for the next 5 years they will not have to buy anything. Right, so there's an interesting political football game going on there, because obviously the airlines are extremely hardly hit by COVID, and therefore they're trying to sort of somehow, in whatever shape and form, attenuate that impact. Anyway, to put it into numbers, you know, at the moment I've got a average 15 million per annum sort of demand from airlines from ETS system. You know, compared to the 196 million with surplus we're talking about and the sort of 200 million deficit we're talking about next year, it's inconsequential. It doesn't really matter. Yep. I've got Fred Payne asking one question. Fred, regarding the innovation fund sales this year, yeah, we've got those in the forecasts. So I think off the top of my head, they're 40 million, something like that.
Mm-hmm. Mm-hmm. Good. Let's check in the number in the questions. There was one question around the financial players. You said they have been withdrawing from the market. What kind of relation you see, an interplay you see between the activity of financial players in the market and the volatility of carbon prices overall? Are they attracted by the volatility? Are they contributing to it? And how can that develop in the near future?
Well, I tell you what, I think it's interesting because I can actually answer that now. If you'd asked me that question back in August, I probably couldn't. But given that financial investors are massively out of this market now, and we still have the same volatility, if not more, than in prior years, then arguably that would mean that they're not contributing very much to the volatility.
Yeah.
Do they like it? If they get it right.
Yeah. So if the volatility stays, they may come back. That's maybe one signal to them.
Yeah, I don't think of volatility. I mean, they would prefer it to be less volatile, right? So, I mean, if you're ultimately, what are you doing as a financial investor? You're managing people's money because they want to, largely because they want to sort of build up their retirement fund, right? So therefore, you don't want volatility, or you need to manage that volatility, which costs money. However, if you're, on the other hand, if you are a carbon bull or any commodity bull, and it goes the right way, then you want as much volatility as possible, right? But by and large, I think financial investors are, I think they've got a reputation, a past reputation, particularly hedge funds, of being, accentuators of volatility. I think the reality in this day and age is that is a bygone era. I think financial investors and hedge funds, indeed, as well, are much longer term players than people give them credit for.
Okay, good. Looking to the questions we get, there's one other complex, which you mentioned that politics tries to not deliver any surprises and be predictable in their outlook and in their regulation. On the other side, there's this European Green Deal on the table right now, which is a massive program, or can be a massive one. What do you expect from that? What kind of role will the carbon market, carbon pricing play in relation to the European Green Deal?
Well, first of all, the fact that the EU is making signs of wanting to use this COVID-19 to launch the next phase of green. And it's kind of something I've been saying the last few weeks, a bit controversially at the time, but it seems to be panning out. Is that I did feel that COVID-19, a lot of people said, oh, COVID-19 surely means that everyone's going to abandon carbon and everything else because it's sort of financially detrimental to people and so on. And I said, actually, I think it's the other way around. I think that actually COVID-19, for the first time as a human race in our generation, has faced a common enemy and a common worry about survival. And actually, once COVID is kind of in hand, shall we say, we'll start thinking about the other big threat, which is, at least the perception is that it's the green, or it's climate change, right? Whether you agree with it or not, that's kind of people's perception, or general perception. So actually, I thought that actually it would become an easier battle to fight, and that seems to be bearing out in terms of, as you say, the green deals, the 750 billion from the EU, all sort of geared at a greener, more climate-friendly economy. So it's good in the sense that it's positive for sentiment for carbon. I think what it means down the line is that we will have, I was about to say more renewable generation. I'd say less carbon emitting generation, because I think renewables, as we understand them today, could change dramatic. Well, not dramatic. They do need to change. So what I'm getting at is that, it's all very well saying we're going to build wind parks and solar parks, and we have done a lot, and we are doing a lot, and there's, I can quote numbers left, right, and centre, and all the utilities I cover doing that. But the problem is that the technology is not really there to allow the renewables to become mid-merit, let alone base load generation. So what you need, for example, the battery technology today, if you think about the biggest battery in the world, which is the one Tesla owns in Australia, that depletes 80% of its charge in 7 minutes. Right, so you store the solar or the wind, build it up, take hours and hours and hours, and then bang, it's gone in 7 minutes and fully discharged in 1 hour, and then it takes several hours to recharge. So the battery, so what I'm saying is that the technology needs to change. Now, does that mean we come up with a battery which is much better, which allows 5-minute recharge or whatever, or is it something completely different? The mini nukes that Bill Gates is talking about, or whatever it is, which changes that. So what is clear to me is that thermal generation will continue to go down, but you need a step change in technology to get beyond a certain limit of compressing that thermal generation. So I'm not sure if I answered your question there, Jens.
Yeah, I think so. I hope so for the colleague who put here the question. I think we have answered most of them, or I encourage you to post additional ones if you have some. Just one remark, we get a question regarding the numbers in your chart and what is basically the cumulative balance. We are sharing these charts afterwards. So, and maybe we take these questions and answer them quickly in a few sentences, better than having it here now in live, I think. Right. But the charts are shared, so if you have additional questions on that, please feel free to post them, and I think we all together can answer them afterwards.
I think there's one question on fuel switching from Vasil. Please. I just address that one. Mm-hmm. So fuel switching for me, where we are today, that's a busy chart, I'll do the easier chart. We are currently at pretty much maximum fuel switching. So this is the carbon price in orange or brown, what a funny color, which Berenberg have, but there you go. And this is the fuel switching range for coal gas switching, and it's based on 1 year forward. I've always argued that we should use 1 year forward, and that seems to be borne fruit because the 1 month forward was blown out years ago, well, months ago. So where we are today is at your maximum fuel switching, which is kind of what this chart over here shows you, at different carbon prices. So at 22 in this case, which is where we are today, you're getting 104 million tons of fuel switching capability there. So yeah, I mean, I've always said that we would get to 100%, and then then you realize that the carbon price is not high enough to save any more carbon. But the problem I come back to is, so ordinarily I say it's fantastic, we're off to the races, and if we were here, we'd be off to the races. But you've got this huge hump, which is saying, fine, but first please absorb 200 million tons, and that's the problem. I hope that answers your question, Vasil.
Very good. Yes, I guess then I found this super interesting. I have to say, Lawson, very, very interesting. It's a fantastic market, and I think we'll use the opportunity to follow up with you later on that. Let's see how this looks like after Q3, Q4 this year. Thank you very much for the interesting presentation. Thank you everyone for the participation and the contribution via questions. If there are some additional ones or so, simply write us a short email or a comment somewhere on LinkedIn, and we'll try to answer that. I can already say we have additional webinars coming up in the next week where we talk about hydrogen. It's actually a German presentation, so only for the German audience, and then we'll follow up in the next weeks with additional events for all of you. Thanks, stay tuned and follow us on LinkedIn. Great. Thank you very much, Lawson.
Great pleasure from my side, so thanks very much. And if anybody wants to ask me questions, I'm on LinkedIn, and I'm reasonably responsive, I think.
Excellent. Thank you very much. Bye-bye. Have a great day, everyone.